Bitcoin is hard money. It's decentralized, permissionless, trustless. It does that very well today. It's built its market value on that. It has liberated anybody who decides to be liberated from fiat rat race. Like, you don't have to go invest in stocks or shiny rocks to protect your savings. Bitcoin has already put in check central banks. So you don't have to save your wealth in anything. You don't have to go risk your wealth to preserve your purchasing power. Bitcoin has already solved that problem. It has already liberated mankind by giving them a neutral asset. And it's absorbing a lot of the printing that's happened that would otherwise have gone into houses and stocks and ribeyes, right? Like, it's a battery for fiat. So it does that. It does that well. What it could do, and what people say Bitcoin needs to do, is become an application stack. And this is where I get into why covenants are pointless, because Bitcoin is not an application stack. Ethereum is an application stack. Ethereum is a place where you can build an application that does all kinds of things. It makes a lot of trade-offs to achieve that, namely trust and centralization. Like, Ethereum's a mess. Nodes are not distributed. Proof of stake is no different than a shareholder agreement in a centralized company. Like, it might as well be JP Morgan chain. So Bitcoin as an application stack, it just lacks imagination. It makes sense to have applications that use Bitcoin as money, but Bitcoin shouldn't conflate its concerns as being part of that application stack, because then you start to risk what it is as money. Bitcoin is, if it's not money, if it starts prioritizing things that are beyond it being money, that presents an existential risk to the chain, whether that's in terms of node centralization. Like, if nodes get too bloated, there's less of them, that's not good. If you have a lot of users captured in centralized closed networks, like an ARC, that starts to skew the incentives of miners. I think, like, if we got covenants, you'd probably see hash rate decline substantially some years out from now, because now it's really going to be going straight to hitting the security budget when you're just rotating VTXOs, basically, where people never exit. So you start looking at these applications as a roach motel, where Bitcoin leaves the open network and gets caught up into closed networks. And once those closed networks reach a certain scale, the incentives start to get perverted a little bit. So the reason I'm not in favor of any, and that's not to say I would never support any change, but the narrative for changes, at least in the last few years, has been to make Bitcoin an application stack, and that is absolutely not something we want to entertain. That you can get into slippery slope fallacies, these incentive things I'm talking about. But Bitcoin is money, not an application stack. So that should never be confused. Scaling, I already mentioned, is ownership bound, is not throughput bound. Lightning is already infinitely reusable transactions. The only limit on how many people can use Bitcoin is how many people can afford a unilateral exit. And that is well under 1 billion people, probably 2 to 500 million based on my ballpark napkin math. And I think that's actually likely to get less as more people pile into things like ETFs, as MicroStrategy acquires things. And that's because Bitcoin is really a store of value. So, but we can already help the 8 billion people by letting them earn Bitcoin. They don't have any money to save, but we can let them start earning revenue across borders permissionlessly without middlemen through Lightning, and making sure that Lightning is distributed to those local community, household, neighborhood extremes, small business extremes. Then you build applications on that. Like, if you want an application that uses Bitcoin as money, connect to nodes with Nostr. Problem solved.